Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me this morning. Well, over the period of 10 days, the Australian dollar has kept to a negative bias and still displaying further pressure to the downside. It's reasons of the fact that the market, first of all, was showing good supply from 74.75, and also the fact that the Aussie Kiwi cross has been relatively holding to a bullish bias. However, these things are all changing and we could see further weakness coming back into the Kiwi dollar, and that would actually see a slight recovery in the Aussie Kiwi cross and also see the market fall away towards 73.80 as the potential goal still holding for the currency. Today we have the private capital expenditure. Now that is expected to come out at 0.4. The previous was negative at 2.1. With retail sales at 11:30 also to be released. Previously was negative 0.1, but we are looking for a positive number of 0.3. However the numbers may come out, I still expect to see them move towards the downside. Now, a break beneath 73.80 does give further exposure towards 73 cents and reassess from there, and still sell up towards that 74 region. A little bit concerning that the fact that the euro has actually gained further ground in the last 2 days, but the dollar index has also weakened and slipped underneath that 97 handle. In light of the pattern, I do expect to see further weakness to eventually return to the euro, especially with these indicators. As you can see here, they are pretty much holding to a negative bias and nearly confirming a breakdown, but not quite as yet. So as long as we maintain a cap underneath that beneath that 113 handle, then I'll be comfortable to see the view to eventually sell off towards that 110.70 handle. Dollar yen did slip, and you can see here we've got a long tail doji after the market failed above the 111 handle to print a high of 21 before slipping lower. There is still concerns that the fact that the market may challenge that minor support at 110.45, but the bullish foundations at 110.0515 should hold and eventually see a recovery up towards 111.15 to 111.7580 and reassess from there. However, a break beneath 110.05 would give concerns and could see 200-point fall as stops are triggered. So just be aware of that level and keep stop losses in accordance to where the markets should be in terms of keeping your capital towards the lower side of losses. Well, the pound has found renewed momentum overnight, however, still likely to be contained anywhere from 129.20 to 130. I expect to see weakness to return and eventually see a move towards 128.35 and lower, with the objective holding towards 127.65 to 127.10. The gold outlook did stab towards the 12.72 resistance, weakened it but didn't break it. Now, if you can see by the technical levels, and also if you check out silver as well, is the market does look like it's turning back towards a bearish phase. Now, the immediate target is at 64. The break beneath there will give further exposures to the downside to 58 to 51 to 53. If we do see a break above 72, this will be only a knee-jerk reaction towards 79 to 85, but likely to fail. And to wrap up with oil, well, the market did print a new low overnight of 47.82. And still keeping, as you can see here from the technical point, still negative. So I expect to see further weakness coming, with the objective holding at 47.1035 and a cap at $50 a barrel to 50.5. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report that will be released shortly.